Hello, everybody. Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It's Monday, and the market, boy, I tell you, it's getting beat up once again. But fortunately, I have some shorts to show you, and those are doing pretty well. I closed two of them today, but overall, the market has been a tough one to trade, and I think it's probably even getting a little bit more difficult. Here's the thing. Just kind of want to show you some of the slides, so let's get into it. Basically, the Dow Jones is down, Tesla moved lower, and Bitcoin basically just fell off the side of a building, so it's not doing very well either. But don't despair. There is help on the way. Here's what I have currently as in my long positions. Not that many. I basically increased my position on the TBT. This is the ETF that moves higher when interest rates move higher. Now, as you know, probably from your economics classes, when interest rates move higher on bonds, typically the value of the bonds fall. But this is the inverse to this, 2-to-1. So when the bond prices go higher, this one will go higher as well. Now, I am looking possibly to sell this right before the Fed meeting on Wednesday. So this is a relatively short-term hold. I did, of course, on Friday, I liquidated my position in Chevron. I did have a little profit, not a whole lot, but I did have a profit there. I'm still holding BP and Shell. That's all I have in terms of things long. Everything else is short. To give you an idea of what is happening with the small portfolio, here it is. As you can see, it's mostly cash. Mostly cash, and this instrument called the TBT, and I'll show you that in just a second. So let's take a look at what that thing is called the TBT. TBT, that is the symbol for it, and it's the actual name of this is the ProShares Ultra Short 20 plus year. 20 plus years, so it's a kind of a mouthful there, but definitely is something that you might want to take a look at. It went up today very nicely, just bounced right off of here. Now, unfortunately, this is not a place where you can see on my chart here. I did buy most of my positions on the last day of May 31st, and I've been holding it ever since, and it just jumped right up here, and after hours it's up again. Now, would I buy this? Well, I don't know. This is such a weird market, but one thing I do think that it is going to continue above the higher high on this one currently. The higher high is 27.73, so that might, this is probably going to pull back tomorrow, so I probably would not be buying it today, but definitely something that you might want to take a look at. Also, if you want to get access to the new industry group heat map, that's available. Super easy. Just go to HTTP DTF 055, or actually, it's actually even easier to just go directly to Dallas Trading Floor, and there is a there is a button that you can push it to take a look at this. To take a look at this one. So just go to www.Dallas Trading Floor. Now, if you're watching on TikTok, just go to my profile, click on the link, and there's a number of things in there. Of course, if you want to get on the action trailer, it's super easy. First and last name and an email address will get you on that. Plus, there's some other goodies on there. Just punch the button, and you'll be good to go there. All right. So without further ado, let's get back to it. My smaller portfolio, as you can see, it's mostly in cash. There is this. I do have one full position of the Ultra, the 20-year Ultra, and that's done pretty well. So I may be increasing that, but probably going to wait. I do think we're going to get a pullback on that probably tomorrow. Now, here's what I wanted to go through with you today. I did put up a new bear put spread, which you might be interested in, and it's easy to get. Access to it. You just have to go to this address, and it's also on the email address. It's also here, at www.Dow's Trading Floor, but the address for this one now this is the heat map. For the address for this one, this is a bear put spread on Hershey, and I just opened it today. Easy to get this. Just all you have to do is go to https://bit.ly/DTF0154. And I'll leave this up on the screen for a little bit so you can take a look at it. This is a neat little one. You wouldn't think that this one would work, but we'll see if it does. And this is on Hershey, HSY, of course, is the symbol here. Let me kind of show you what's going on here. Why would I short Hershey? Especially because you think consumer goods. That's probably one of the places to be, but the entire market is sort of breaking down. Here's part of the reason. Here's my thinking on the short on Hershey. we were trending above this 50-day line, so very, very nice, but basically just about a little over 2 weeks ago, about 2 weeks ago, this thing just fell out of the sky. As you can see, it just sort of it went all the way down. Basically from, let's get that. Come on. There we go. So basically going from here down to all the way down to 201. So this is the floor that it has established. Now, if you'll notice, the trend on Hershey is a downward trend. Even though we have this upward trend, we started this like pullback trend, basically right here, about the 1st of April, and then we're starting to move lower on that. Now, what happened was it fell through the support on the 50-day line, and then all the way down to 201, and then rallied back up to the 21-day line. Now, where I made the short was today. After it had rallied to the 21-day line, it then since has moved lower. And to look at the technicals on this one, basically we are basically below the 10-day line, the 21-day line, and the 50-day line. We're still above the 200, so I don't think it's going to go down that far, but I do think it's going to fall basically to about 201. So the way this particular short works, pretty simple. Really what it is it's you buying basically, and this only did one contract, so the very limited risk on this one. The risk on this one is under $300. So that's the max you can lose on this one. It's basically the way it is that it's a July 15th put, 210 put, and then selling simultaneously, buying the 210, selling the 200 for a net of about 295. So that gives you an idea. But the beauty deal on this one is that this has the potential of being a lot more lucrative. This one has the potential of potentially up to about, I think it's 3 to 1. Let's take a look at that. I want to make sure that I have that one right. So what I'm doing here is I'm just on my other screen here. I'm just moving this up, and let's get that. There we go. All right. So let's pull that link up on. This is by the way what you'll see when you go to the when you go to www.Dow's Trading Floor and you just click on this link. This is what you'll see. Oops. There we go. Okay, so this is what you'll see here, and let's see if we can. Did I get that? Yeah, there we go. All right, so here is the bear put spread that I have on Hershey. There we go. Let's get that first slide up there. There's my bear. There's Hershey bear put spread, and the way this thing works is basically it's it's $295 for one contract on this spread. So the way it works is you buy that July 15th 210 put, and the price I got this morning was $5.05. Now remember, this is for 100, so it's $505, and then simultaneously selling that 200 put giving us income of $210 for a total out of the pocket expense of $295. Now with this one, we have a potential of making up to $705 if Hershey falls to about 200. So that's looking pretty decent. I mean, if it moves to about 200, then then we could possibly that would possibly give us a very nice profit. So right now with Hershey, the way that's looking is we're at 209. So we've already fallen here from 210 down to 209. And if what I think is going to happen, and we lose our support, we will move right down to right about 200. Oops, that's my other one. We'll move right around to right around 200. If we move down to 200, we're going to make all the money. Now, of course, if we don't get all the way to 200, we'll still make a pretty good chunk of change here, considering the risk on this one is pretty minimal. I mean, the risk on this one is pretty minimal. So, kind of looking at the chart here, let's see if we can make this bigger. There we go. All right. So this is going to be on Hershey. There we go. There. All right. So if we're looking at the matrix here for Hershey, there we go. You can see we started out. We're actually up about $29 approximately so far here, and if it continues the way I think it does, all the way down here, possibly to about this. As the time runs out, you can see it becomes worth more, and eventually, if we hold it long enough, if we hold it to the 15th of July, we have a potential of a $740 payout. Let's kind of take a look at the line chart here. Kind of gives you an idea of what I'm talking about. I know this is kind of complicated. Hopefully, I won't be sailing too far over everybody's head. But basically, as the value of the underlying stock decreases, you can see we come into this profit zone, and this is kind of where we want to be right here. As the value of the trade moves lower, this is the value of the spread, and as you can see, we reach our maximum basically right about here if it falls below about 182. Now, do we expect that to happen? Well, it doesn't have to totally happen that way, but that's the way it would. That's what would happen in order to gain the maximum amount. So let's pull it back to the table. There we go. This kind of gives an idea of sort of what's going on here. The value of this depends on what's going on currently. The theoretical price for this one right now is about $29. We just opened it today, and so as the stock price goes lower, the value goes higher. So if for some reason, I doubt this will happen, but if for some reason this Hershey went down to 170 in a few days, we would be in the $700 range. But if we hold it, we're going to hopefully make a little bit more money there. 740 is the maximum. I don't necessarily always hold these until the end, but sometimes we do, and it can work out. It can work out very, very nicely. Very, very nicely on that. So that kind of gives you a look-see on that. Well, let's get back to. Let's see if we've got. Yeah. Okay. So now we're going to get back to. Back to the other trades. I did close 2 trades today. One on a bear put spread again. This was on American Express. This was a nice little trade. We made a net profit on this one of about $910. It was a pretty nice little trade. I mean, considering how long we were in it, we weren't in it that long. I'll show you the chart on this one. And this is kind of what I'm looking for in terms of, what's going on in terms of the, in terms of stock. I'm really focusing in on looking for some of those short trades that we can do if you'll notice, this one was jumping along here, and then it fell through the 200-day line. It came right up to the 200-day line, and you'll notice I always talk about that death cross. Well, you can see that's where the death cross sort of happened. That's where I entered the trade as it rallied up to that 200-day line, and then as long as it was above, we shorted it as it moved up, and then basically it was on the 21-day line, and then of course the market moved against and it just fell, and because it fell so quickly, we were able to kind of take advantage here and close it early. Now, here's the thing: when you get a tremendous movement down like this, you look at this volume, people are selling. What you want to do here is that when it moves down, you want to close it. Really, you want to kind of take your profits fast on this one. Why? Because this one is going to bounce probably back higher. So we did pretty nice on this one. This is the American Express bear put spread. I also closed one that I'd had for a while. This was on Disney, and we had this bear put spread out there for a while. And if you've been watching it for a while, you'll know that we did put this one out to everyone. This one's a little bit more complicated because I've actually been shorting Disney for a while. As you can see, I started basically up here, and then I've been kind of doing the short thing. I shorted there, and I closed, I covered, and then I shorted again. So basically for this short, we basically did it here. Now, I didn't have as good an entry on this one. What I should have done, or what shoulda, woulda, coulda. When these things are trading below that 10-day line and they rally to that 21-day line, the 21 day is a very important line, because what will happen is when it's on this downward trend like this, the stock will typically rally to that 21-day line. What I should have done is waited until I got a rally here for it to start moving down. So lessons learned. I'm probably going to be doing that one more. Now, I do also have I also opened last week. We've done pretty well on this one too. A bear put spread on Nike. This one, of course, is a Dow stock. NKE is the symbol, and this one, it's not moving quite as fast as American Express, but this one did also, this one did also kind of move very nicely. Now, the key on this one, again, is that 21-day line. So we came down, and then we rallied up to that 21-day line. Now, usually it'll sit right on that 21-day line, but this one actually rallied up a little bit higher. I shorted as it rallied, the final rally to the 21-day to the 50-day line. When it hit that, that's where I opened the short, and boom, it just went down, down, down. And we still haven't closed this one. We're up on this trade pretty nicely. We're up on this trade about $225 since we opened it, and we opened it on the 9th. So not too many days. We've been short about we've been short about 4 days on Nike. So I tend to think we're going to ride it lower. We'll see what happens. We'll see what happens. And then finally, I have a bear put spread on Costco. COST, of course, is the symbol for that one. And that one, I didn't quite. Again, my entry on this one was not as good. It was sort of good, but it wasn't as good as my entry on American Express. This one came down here. And I made the mistake of, I didn't wait. I got a little bit impatient, and I didn't wait until it rallied to the 21-day line. But once it rallied to 21 days, then I opened the spread, and now it's starting to make its move down, and hopefully we will see it. We will see it move well. It's got to really move below about 125, so we've still got a little bit of time here. I don't know. I may be closing that one early. Who knows? But we'll see kind of what is going on. So, without further ado, thank you for holding. And let's take a look about Tesla, would you sell Tesla at 566? If I was down more than 6% on Tesla, and I did this actually, it was very painful because I love Tesla as a stock. But yeah, I would sell it. I would sell it. Here's the issue. Here's the issue that you're dealing with. Here's the deal you're dealing with Tesla. We're coming down to the bottom of the consolidation. The floor for Tesla, at least in the short term, is about 620. That's the floor for Tesla. This is a shorting pattern, just like I was showing you. We came all the way down to the bottom of the consolidation. We rallied to that 21-day line. That's the key. That's the green line here. And then it kind of backed off, and then it rallied, and now it's in a downward trend. So I think that it's very likely that if it falls below 620, I think it's going to go lower, unfortunately. Let's look at the weekly chart to see if we can kind of figure out if there's any backstop there. Basically, let's see if I can take off some of my notes, because I have a lot of notes on this on Tesla, because I've been trading it for quite a while. This would be right here, this 560. This would be about 600. Where you're talking about would be right about here. So I can definitely see that you're picking up that as the floor. Let's take a look. Here's a way. Let me see if I can. By the way, everybody, if you want to take a look at this site, this is an interesting site that might be helpful. This one might be helpful when we run into this kind of situation where we want to look at pivots, and you don't necessarily have access to MarketSmith. It's a site called Market Whisper, Earnings Whispers. HISPERS. Let's see if it'll. Yeah, there we go. Earnings Whispers, and this is a free site, so you definitely can take advantage of this one, and it may be helpful when you're trying to when you're trying to find when you're trying to find pivots. So here's what you do: you go up here and type in TSLA for Tesla. It's going to come up here, and it's going to show us, and this is the key here, it's going to show us the pivots, and the pivots are right here. So currently, it's basically 680. That's a major pivot for Tesla. That's the first pivot down. That's going to be your first pivot. Your first support. Your second support for Tesla, 664. So that would probably be your kind of your break even, your sort of line in the sand. That's kind of where I would put it, 664. So basically you're talking about 666, which is right above that. So that makes sense. That would be the pivot down. But here's the thing: the short-term price, at least the trends are looking like it's going to go lower, and the long-term price. So here's the thing: if you're down, obviously, hopefully it will turn around for you. But really, what you got to do, and this is really painful, because I have to, I just put it in there and forget it. I think if you're down more than 7% on this one, just take my advice here. Take my advice. Sell it and wait for a better entry point. Just sell it and wait for a better entry. But that's kind of what I would do in your situation if I were in your shoes. So definitely, that's what you want to do. But the pivot right now, the pivot is 699. The secondary floor is about 680, and then of course the pivot below that, 664. Excuse me. So you're pretty much right on it. Oh, you have the music playing in the background. Sorry, I thank you for that. Let me get rid of that. Sorry about that. Thank you. I'm sorry. Sometimes it doesn't come up right. I don't know. It's a lot of controls here. So thank you for telling me that. Oh man. Okay. Thank you. Tough market. Oil is down. Even Lyft is going to a $10 short. Oh, Lyft. Okay. Well, the problem with shorting is, and here's what I like to do with shorting. I'm a big proponent of using bear put spreads. Why? Because there's just a lot of reasons that I could go into, but I like to use those. But you want to make sure that you're not shorting too late. That's a big deal, because if you are shorting too late, then it's much more difficult. You got to do it right before it's going to go south. And how do you know that? Well, that's what I was talking about, the 21-day line, and that's kind of my thinking there. All right, let's take a look at lift. This is probably not a good short. Now, I know that the overall trend is down here. Okay, the overall trend on this is down. As you can see, we had a gap down. Okay, there's the gap down, and then there was a rally to the 10-day line. Okay, now where you normally would short it would be a rally to the 21-day line. Okay, didn't quite make it there, but as it started to fail, that would have been right there. Would have been the shorting place. Okay, it would have been the shorting place on the 10-day line. Okay, but unfortunately, we are below that 10-day line. We want to short it as close to the 21-day line as we possibly can, and then or alternatively to the 10-day line. But it's just too far away from the 10-day line. Here's why you don't want to do that. Here's why you don't want to short like that, is because what typically will happen in a relief rally, this will rally, and then you'll be, you'll be not in a good way. So I don't think I would short it. I don't think I would short it. There's just not enough meat left on the bone. This was a lift if we show it here, let's show it on the monthly chart. Lift, go up to there. Lift at one time, believe it or not, was like a, was worth 68 bucks a share. It's now worth 14. So that kind of gives you an idea that it's lost about 80% of its value. I like to short with a little bit more meat on the bone. That's one of the reasons why I was looking to short. That's why I was looking to short Hershey today, because there's still a lot of meat left on the bone with Hershey. We'll see if it works out, but whatever. I bought CVX today at, and looks like I'm in. Oh, Joe, goodness gracious. All right, you're on. Okay, well, I don't think that's necessarily totally bad, Lisa. This is a tough market to time. It really is. What you want to do right now when you're going long is you want, and this is really, really hard. I wish I could broadcast this out when I'm doing this, but you want to sell into strength and you want to buy on pullbacks. So let's look at CVX. I mean, you're buying the right thing. It's just your timing isn't perfect, and believe me, this is not easy to get this to get this right. It's as difficult, very difficult to do this. But let's look at CVX. Okay, there we go. Chevron. All right. So what are we doing here? Why would we do it like this? Well, here's the thing, and this is so difficult. We pulled down today, and it looks as if it's getting support now. I think you'd probably be okay. You were at 168, so you're not that far off, really. That's really not that bad a buy. I believe that when we get an update here, and we're likely to probably by Thursday, I think we'll have a relief. We'll have a little bit of relief, but I think Chevron is going to bounce right at that line. I think it's going to go down there, test like it did, and I think it's going to go. I think it's going to start moving higher, but we'll see. You don't want to do anything because it may go further down. It may go down to 160. You don't know, but it should be getting some support at that. At that line. Let's kind of take a look where the 10-day, where the support is on the 50-day line. Yeah, we're pretty much right just below the 50-day line. I think we're going to get support here at 168. I do believe we are, because that's typically where we would see support. Where we'd see support. So I definitely think, and as you can see, that's up a little bit in the after hours. I think that we're likely to see a reversal. So I wouldn't sell this thing necessarily, but here's what I would do, Lisa. I would set a stop loss, and let me show you where I would set it. I would set it at the low of today's low. So just undercutting the today's low. So where I would set my stop loss for Chevron would be at about 163.60. Okay, so that's where I would set my stop loss, because that would be below that would be below the lower low today. So 163.60 would be the stop loss for Chevron. So that's where I would be looking to place my stop loss. It would be right here, and you can see it right below that lower, right below that test. Like, as you can see, that red bar comes down right here. That's right here. Okay, there. That's where I would put it, right here, because that's kind of your support. Even though I think we're going to get a bounce there, and we are getting a bounce 167, but it came all the way down. Look at that. That's amazing. Let's look at the 1 minute chart to kind of give you an idea of sort of what was going on there. It came all the, let's go a little bit so I can see this a little bit better. Okay, let's go to the 10-minute chart. There we go. All right, see how it came all the way down, basically, and this is the level right here. This is the 163.60. So it came right down there and tested. So where you should put your stop loss is right there, right below that, because it's already seen support there. So I don't think you should sell your position in Chevron. I think you should just kind of just keep it on, and just set a stop loss, and I think you'll be fine, because I do think it's going to bounce. I do think it's going to be a bounce a little bit there. All right, again, would you sell Tesla at 407? I probably would wait until we had a rally, and I'd sell into the strength. That would be my guess. Now let's take a look at Chevron again. Tesla, excuse me, TSLA. I get confused here. It's funny because in 2001 I started buying Tesla at, I remember exactly, at 316. That's where I started buying. So it's interesting. It's come kind of full circle there. All right. At 407. That's pretty low. Okay, so that would be okay. I see what you're getting at. You're looking at that consolidation. Yeah, you're looking at that consolidation right there. That makes sense. Would I sell it at that level? Well, I probably would sell it before, and then wait to see if it pulls back to that level, and then buy it at that level. So I would consider protecting my capital. But yeah, you could definitely use 407. Definitely use 407. All right, Lisa. And let's see, it's Shell. Let's look at Shell at 55.92. I'm still in Shell. I didn't have a large position, but I still like it, and I still think it's going to move higher. It's just today was an awful day for everybody except for the shorts. And it's a very similar pattern to the pattern that we have is very, very similar to what was going on with Chevron. This, I do believe, is pulled. This is a little bit stronger. This is part of the reason I didn't sell here, is because this, I believe, is a little bit stronger of a floor, because we had a prior pivot at 56.13. So we're right, we're almost at the pivot. So that is actually, I do believe this is a test, and this will move higher. That's my guess, because that's just typically the way it is. Now, there was a lot of selling today. I could be totally washed up here. We could take another leg down easily. I don't think it's going to come down to the 200-day line, but I definitely think this could actually move lower. But I do think this is going to reverse. Why? Because of this major pivot at 56.13. So that's why I kind of think that we're going to see another pivot. But I would hold on to that one. On this one, Lisa, I think that the best place possibly is to set a stop loss at about 54 at about 54.20. That's probably where you want to be. about 54.20 on that. Yeah, definitely a bad day. I agree with you. It's a rough day. Rough day out there. I agree with you. Totally. All right, Chuka. Oh, it's still on. I hope it's still. I hope it's off now. Hope I have it off. Yeah, thank you. Thoughts on transportation stock like UPS? Well, I am right now net short. I mean, I'm basically short, as you know. I only have the only thing I have really long, except for Shell and BP. I still have a little position in BP. Is the TBT. So would I be interested in this one? No, I don't think so. Not a buyer of UPS at these levels. So I'm really not a buyer of UPS at these levels, just because. Oops, there we go. I'm really not a buyer of UPS at these levels because I think it could leg down even more. The test would have to be at 165. We're currently in a bit of a downward trend, on UPS, unfortunately. So I just wouldn't be a buyer. We did have, this would have been a good short right here. It would have been a good short right here. Typically, they'll come down. This is very typical. You have that leg down, and then you sort of have a consolidation under the 21-day line. Then it reverses above that 21-day line, and then usually the place you short it is right at the 50-day line. As it makes it up there, then it usually loses traction, and boom, it goes down. And part of the reason why that works is because because a lot of the algos are trading on these lines, so that's part of the reason why. All right, why are oil stocks falling when oil is going up? Well, because that's a very good question, actually. Because people are taking profits right now. The overall market is we are going to be heading into a recession, and I think it's going to be a pretty serious one, by the way. We are going to be heading into a recession. Inflation is raging, but the original reason oil stocks moved up so quickly was because they're figuring in $200 a barrel oil. I don't think oil's going to go that high, but it's going to go high. So. It's going to go high. So, nothing goes straight up or straight down. That's just the way of the world. So, with stocks the way they are, you get them on the pullback, rally, and then sell into the strength. This is not an easy market to trade. This is not an easy market to trade. Let's take a look at the price. I think that there's an oil West Texas Intermediate. Let's take a look at the price. Yeah, this is crude oil based on the West Texas Intermediate price, and let's take a look at that. And basically what's going on here, let's get the big screen. Yeah, there we go. There we go. All right, so what's going on here is that, we had, this is actually crude oil based on the West Texas Intermediate. This is what comes out of the Permian Basin. We have it trading basically above the 10-day line. Yeah. There's a 10-day line. Trading above the 10-day line. It did pull back a little bit today, but I think it's going to get support. I think it's going to get support here on the 10-day line. The ceiling right now is 130, and we're currently at about 120. So we're about 10 away from that. But I do believe, based on the relative strength line, this is the relative strength line here. This is the price of oil against the market. The price of oil is gaining on the market, but I do think that this is a momentary. This is just people taking profits. I do think that we'll see we probably will see support at the 10-day line. Let's take a look. I'm just curious. No, this doesn't give us a 10-day line. This doesn't give us a line for that, but. It's marching right up the right up the 21-day line here. So very likely that we're going to see this thing at least trend for the near future. The price of oil. This is the crude oil. This is not the oil stocks. It will trend up to 130, and then it probably will back off, because this is where I think the ceiling is, at least for the short term. But the price of oil is still moving up, still moving higher. And of course, this is the West Texas Intermediate. So this is the stuff that comes out of the Permian in Texas here, and also in New Mexico. All right, let's take a look. Oil balance trading. Yeah, this is hard. This is tough. Can you expect continued oil prices with the ignorant regime? I'm afraid we probably will. I mean, it's not funny. It's horrible. It's everybody's suffering because we have people that really need to go to school on oil, and then to go to school on energy. I mean, we have an energy secretary literally that doesn't. I mean, she doesn't even, I don't think, know how gasoline is made. So it's just sad all the way around. Okay, it's just sad. It's nothing more than that. All right, let's look at ICL. This is the fertilizer company, and of course, boy, I tell you, it is doom and gloom and all that stuff. Now, quite interesting. This is showing me we may be getting some support at the 200-day line. I think this thing is likely to bounce, okay? And I think it's likely to bounce here because I want to go back to the monthly chart to see if I'm just blowing smoke here. I may be just blowing smoke. Okay, well, this is fairly significant that it hasn't. Well, it's showing support. It's showing support. So my guess is that this one is probably going to move higher towards the end of the week. I wouldn't probably buy this until after Wednesday, after they've come out with the news on the interest rates. I probably would not buy this one until then, but I think this one's likely to reverse higher. I really do. I think this could go from 10 to 12 very easily, in about a week or two. So that's interesting. One of the ones that I've been trading, and I want to kind of put up there for everyone, is the TBT. This is a kind of an inverse. Normally, inverse ETFs are not my biggest holding. I'll be frank with you on this one. But what I'm going to do with this one is, and I didn't put in all my buy points, but basically, what I'm doing here is I'm going to be probably, well, let's see if I can get the markup tool. This shows me there we go. So this is my entry. This is my entry into this. It was right at the 21-day line. I'm really big on that 21-day line. It moved up. Now I'm probably going to be selling this. My guess is I'm going to be selling this one into strength, and I'll probably do it on Wednesday, right before the meeting. Because I have a feeling that when that meeting happens, this thing's going to go down. So that's probably what I'll be doing. But that's kind of it's kind of like that. That's how you have to trade the market right now. You can't if there's going to be a news or earnings or something like that, you got to sell before it, and then get back in. So it's just a very tough market to trade. But that kind of gives you an idea of what we're looking at. All right, last one, and I could go on for hours on this one because this is a big deal. Is Bitcoin. Now here's the thing. I'm not going to show you the price of Bitcoin, but I'm going to show you the GBCC. This is the Grayscale Bitcoin Trust, and what this is just an ETF that tracks it, that holds about 4% of the world's Bitcoin. GBTC is the symbol, and this is what I use to analyze Bitcoin and sort of the Bitcoin futures. Now, this is very, very instructive because look at the trend. Look at the trend, everybody, on Bitcoin. Really, Bitcoin hit its peak basically here in November, and this totally correlates with the Nasdaq. The Nasdaq hit its high in November, so this is not a hedge for inflation because this is following the course of the of the NASDAQ. So this has been going down. As the NASDAQ falls, Bitcoin will fall as well. And it did gap down here. Again, this is another good example of a shorting formation. It'll come up to the 21-day line. It'll then move down, usually very quickly, almost in a straight line, and then it will have this L shape. Okay, this sort of L shape, and then this L shape will come down. It'll go sideways until it catches up again with the 21-day line there. That's a great shorting area right there, because that's typically where it can't get support. And you can see this one went boom, just like that. And I can show you this pattern again and again and again in many of the the charts. Well, everybody, thank you so much for watching. I always appreciate all the great questions. Let's take one last question from TikTok on Amazon, because this is a big deal too. AMZN. And let's take a look to see kind of what is going on with Amazon. Notice again how this has just been the weakness of the market. Everything has come up to the 21-day line, and then it's failed right at that 21-day line. So that kind of gives you an idea. Now I do think we're going to get some support, but this is Amazon, believe it or not. This is after their big split. Notice how it's 104 now. If this of course split 20 for 1, but look at how it's moved down since the split. I expect this thing probably to move a little bit lower, and then probably I think Amazon is going to get support right here at about 85. That's where I'm looking at. That's on a split adjusted basis. So that's kind of where I think it's gonna get some support, as you can see, because that's the support over here. All right. It definitely does. I agree with you. The split messes every chart up, because it's showing you what it would be like if it was split 20 for 1. Absolutely. Yeah, it's definitely the case. I'll come back. It was 20,000 next week. Oh wow. If Amazon goes to them, I'm unloading them. Yeah, I think you're right. No, I do believe that I think that there's a good chance it goes to 85. It gets support and it goes higher. Amazon's not going out of business, folks. It's not going to go out of business, at least not this year. But this is a tough market. I mean, we've got tons of inflation. It's difficult. It's difficult. Well, thank you, everybody. Hopefully, please like my show, because it really helps me out. Please like and subscribe to the show. That would be great. So please like the show. I really, really appreciate it when you do that. Also, if you're not already on, if you're not already on the Action Trade Alerts, if you're not already on the list, please do that too. Just go over here to www.Dallas Trading Floor. So please like that. I really appreciate that, and get that going on as well. I'll be back at 5. I'll be back at 5 tomorrow. So hopefully you'll come back and take a look. Take a look at my show back then. So happy trading, everyone. Don't get depressed. This is a tough market to trade. I'm going to show you some more shorts that we can do to make money in this market. And by the way, if you're interested, we have a special Discord group, and that a lot of people get a lot of benefit out of that. That's really the first 2 or 3 hours of trading, and I try to help as much as I can show you the trades I'm making in real time. Sometimes I'm not as quick on the trigger as I'd like to be, but and try to help with everybody else's too, for what I can do. And also we have a lot of great people in there too that are pretty good great traders actually. It's just this market is so tough that also lend a hand. So that's the Discord room, and that's easy to get into. Just that also is going to just www.Dallas Trading Floor. So until tomorrow at 5, everybody, happy trading and stay safe. Remember, set those stop losses at the very maximum, 7%. Please don't lose your capital. This is the time that's so hard to trade. Capital preservation is everything in this market. So just go smaller. Make sure you have your stop losses set at 7%, and I'll be back tomorrow at 5.